Okay, guys, I'm going to go to Ask Scruff. Now, this one's for Grey. So let me just quickly show you. Now, yeah, the guys are having a big chat in the challenge there. So if we come down, no worries, Wayne. We'll see you when you finished your shifts. But the recordings will be there for you anyway. But it's this one. Been looking at the DAX using red light, green light. RSI setting 25, 50, 50. Okay. And you mentioned a couple of times the faster the market could shoot. Could I explain further? Okay. First of all, let me explain the way that the RSI works, and then you just apply it to suit. An RSI on a standard setting of 14 shows general state of market. Is it trying to push up? Is it trying to push down? And it's looking 14 candles back. So it's kind of a little bit slow, but what it does is when it gets to extreme, the chances are it can't hold the market that much longer, and there may be a direction change. Okay, so that's what the 14 is about. But it takes a long time to push up, and it's kind of lagging if you want to see what's in the moment. Now, if you change that to a 5-period setting, that's looking 5 candles back, certainly on a 15-minute and a 5-minute chart, it's kind of showing you exactly what's happening over the course of the next 20 to 30 minutes. Now, for scalping and quick burst trades, that's exactly what you're looking for. Okay. Now, is it good on its own? Of course it isn't. In fact, it's suicidal to do it on its own. What you want to be doing is using it in conjunction with a higher time frame bias. Now, if you looked at a 28, that removes the momentum out of the equation altogether, and it then relies purely on strength of market and who has dominant control of it. Now, that becomes incredibly powerful, certainly if you're swing trading, because you always want the dominance in play, which is why the river works very well with a 28 setting. Now, to the question of red light, green light, the 50 or the 50-50 is basically just the center line, and you want to see who has control, if they're above it, the buying, below it, the selling. Now, it's based on a combination of long strength, or in other words, deeper time strength, and current strength, which is the 28. And the way you would work it is by 2 charts. A higher time frame, my personal preference is the hour versus the 15, because it's good for day trading to get roughly about 10 pips per trade. Okay. And from there, you want to sort of adjust your target to the market. So your faster markets, your DAX, pound JPY, Euro JPY, US 100, the FTSE, you're looking for about a 10 pip burst based on a pure strength push. Okay, now that's the way I would do it. Now, on slower markets, you want to drop the target down. However, there becomes another element to this. If you're looking at, say, the DAX and you wanted to scalp the DAX, you could drop the period down to a 5 as the trigger point. You leave the 28 where it is to show who the dominant direction is, buying or selling, and then you use the lower one to get the quick bursts. The downside of it is it's only using 2 reference points, and you're relying on the market pulsing. Now, that becomes problematic, and it's why, got me coffee, fantastic. And it's why scalping rarely works. You're better off leaving red light, green light on its default settings. And you'll find, yes, you'll have less signals, because that's one of the things that the faster RSI does. It gives you more signals, but the weaker. On a 28, it's less signals, but the stronger. And I would take the stronger signals over the weaker ones every time. And it's why I sort of preach all the time. Score, score, stop. If you're on an asset, do 2 trades on it, quit it. If you're going for 3, 4, 5 trades on a single asset, over and over, as we see in the Discord all the time. They might talk a big game, but they don't make any money from this. So always be careful of people that are going, yeah, I'm in, I'm out, I'm in, I'm out, I'm in, I'm out. It's a bit silly, really. You're better off looking for a quality setup that you know will pay you and be happy. So the rule of thumb is this. The bigger the data sample, the less signals, but stronger. The lower the number on the RSI, more signals, but weaker. However, that's why you have the 28 set on the high time frames, because at least if you get the entry wrong, you're going with the dominant direction, it'll forgive that entry. Hope that helps you. Catch you soon.